I want to talk price versus value first, okay? Price versus value first. I want to play a little guessing game. Tom, I know you like guessing games. Tony, you too.
Sure.
So I'm going to ask you. There's about 270 US listed Chinese equities. I'm not including the ETFs here, okay? I'm just including the US listed equities, ADRs, whatever the case may be. There's about 270, maybe plus or minus 10, maybe 260, 280. I think it's right in that ballpark. My question to you two gentlemen, let's see if you can get this, see if you can nail this. What do you think the total market cap is of all 280, 270-ish names of US listed Chinese stocks?
I'm surprised there's 280. I thought there was less, but I'm going to say
I only know like 8.
And I'm going to give you, let me give you just a little bit of a hint, okay? Alibaba, I believe, has a market cap in the 200 billion range.
Okay.
260 billion. So that's your hint.
Okay. So if I'm going to take them all, and assuming you're not using ETFs like FXI, right? You're just using the companies.
Correct. And I think FXI is like 12, 13 billion. Just another hint.
Okay. Anyway.
But no, not using those.
Yeah. Okay. If I was just picking the stocks, because most of them are garbage, I would say that outside of, I don't know what Baba is, you said 200. Let's say Baidu is another
270.
What?
It's Alibaba's about 260, 270.
And then Baidu's probably another 200.
No, Baidu's only 40.
It's only 40?
Yeah.
Okay. So in that case,
I have no idea what it is.
The whole thing is probably about 500 or 600 billion. That's it. It's a fraction. I'm guessing that, I mean, most Chinese companies are complete garbage. They're penny stocks. And I'm guessing that the whole thing outside of the top 20 is probably less than like 50 billion. Everything else is probably 450, 500. I'm going to say I'm going to go just ballpark at 500 billion.
Tony, you want to take a guess?
I'm going to abstain. I have no idea.
I'm going to say 500 is probably high.
I'm going to abstain. I don't play your reindeer games, okay, so you can make your point.
Yeah, but go ahead, make your point. What's your point? It's garbage, right?
I'm not a sucker like Sadnov.
You guys always think I'm setting you up. I am not.
No. I don't think you're setting me up. It's a reasonable question. I think the number is going to be crap. And you're going to say it's like 1/6 of the size of NVIDIA.
I could probably go that route. That's actually in the ballpark of being close. It's 790 billion. It's about 800 billion.
Okay.
Which is approximately the market cap of Tesla. I think Tesla's right in that same ballpark.
Okay.
A couple of weeks ago, Tom, you would have been right on. So before this 20 to 50% move off the lows on a lot of these individual stocks, you would have been in the 500 to 600 billion dollar ballpark. So my question to you is price versus value on these Chinese stocks. Obviously, a lot of them are taking a bit of a haircut between 2 and 5% this morning. Vol's contracting, which makes a lot of sense. These things had dumb, high individual implied volatility, and all the IB ranks were near 100. So the contraction of volatility shouldn't surprise anybody. My question, though, I think for many people is going to be, now that you're starting to get a price discount, these things aren't going a straight one-way train. If people aren't invested or they don't have some upside exposure, the question is, where is a fair and reasonable price to look to participate to the upside? And so my question would be to you guys, knowing that the total market cap of all U.S. Chinese equity exposure is only in the ballpark of $700 or $800 billion, does that feel super cheap to you? Even after we've gotten a 20% move in a couple of weeks, it seems like this isn't necessarily a big short squeeze. It's the fact that the market was completely offsides towards a normal or more fair valuation on a lot of these underlying. So at least that's my read. And so
what I find interesting is the fact of how late you are to the party. Because
first of all,
we've been sitting here talking about Chinese stocks with you because you're basically part Chinese.
Tom, I've been long.
What?
He's been lost.
I've been long.
I understand, but I've been talking to you.
You aren't a part of this run. You dumped them with a 4% upside move. They're now up 25%.
I understand.
I'm still holding them.
I know, but what I'm saying to you is that we've been talking about this, how undervalued they were for 2 years. And the fact that they just ran, all of a sudden that becomes a story. No,
my point to you is I still think they're trading at value. That's my point. That the price versus value, that the price has run, but I'm trying to articulate a case that on a value basis, and my value case is the total market cap of all the exposure on U.S. listed Chinese stocks is only 800 billion, which is the price of one U.S. company like Tesla. I'm trying to articulate to you a case for value even after a running price, and I want to see you interact with that.
Yeah, I understand that. and my argument is the difference is that if Tesla was a Chinese stock, because I just have to point this out. If Tesla was a Chinese company, it would be trading at a fraction its current market cap. The reason for that is because in China, there are unwritten caps, and you can't have a company that's too successful or too big, and you can't have a true free market where it allows these things to go what their value is. So yes, I would agree with you that Chinese stocks are still probably undervalued relative to US stocks. You can never expect to achieve full value for Chinese stocks because that's not how they work, and that's not what the Chinese government wants to happen. That market is too controlled, too manipulated. It is not a free market. So that the whole issue with Chinese stocks is in the US, the market can determine price. In China, that's not how it works. And so, I think the more interesting question would be if Baba was a US company, would it be double or triple its value? If Baidu was a US company, would it be worth 5 times what it's trading for today? And the answer is probably both those cases. And that's what's so hard about pricing Chinese stocks. And that's why you had to wait for 2 years for these things to have a short squeeze, because the Chinese government has ruined their marketplace. Who in their right mind would ever invest in China anymore?
Me.
Like, who in their right mind? Because you have no idea, if your investment is protected, if you're going to have a liquidation event, if you could ever get what fair value is. It's not possible to know. China has already done, there's so much damage over there. The whole economy and the whole free market structure is so damaged that I'm not sure that they can recover to full value.
Let me ask you this. Well, I
just want the vol to go lower in Baidu, if that can happen. If anybody can help me there, that's all I really care about. I'm short premium.
So you're short premium there?
Finally getting paid today. It's been expanding. IB rank is now 100 again. I just want volatility to go lower in there. That's all I need. I don't care where China goes, where they go, whatever they do.
So there's no opportunity. So Tom Sosnoff there's no opportunity of selling puts in these names with this decent IB rank, and if these things are peeling off 15% or taking off the excess, there's no interest.
We took a decent amount of money from yesterday to today on Chinese stocks because we're short premium. Yesterday we sold more and it worked out nicely. So I'm not saying for 1 second that I'm not trading it. What I'm saying is that in general, if you want to sell puts in Chinese stocks today, I'd be totally fine with it. I think they have a little bit more to come back, but given how strong they've been, there's probably not that much pullback going to happen before they go back up. So sure, it's a good opportunity to sell puts. But what I'm saying about China is that it's very difficult to compare, the entire 200 Chinese stocks that trade in the US to one stock like Tesla, because again, if Tesla was trading in China, it would be, probably a $200 billion stock. And if all those Chinese stocks were trading in the US, it would probably be, instead of 800 billion, it'd probably be like 2 or 3 trillion. It's just a very difficult comparison. You're never going to get full value in China.
I totally agree with that, and there are very valid reasons for that, right?
Yeah.
Like the accounting issues, government intervention issues, economic issues, the fact that you could have a delisting or escalating conflict between U.S. and China. There are all of those issues, but those risks are in the price. That's why you get the cheap valuation to begin with. I guess my point here is I don't see these moves, these hockey stick moves in a lot of these Chinese stocks the same way I saw GME. I do think it would be perfectly reasonable to see some reversion here or a pullback. But I see the case for these stocks as very, very, I don't see this as like a meme stock move in these Chinese underlyings. I see them getting closer to a reasonable valuation given the monetary and fiscal stimulus and the relative cheap valuations in the market. Do you see it the same way, or do you see this as basically a GME, AMC type short squeeze across all these names? I don't see it that way.
I do not see that as a short squeeze. I think your articulation is perfect.
All right, I'm going to move on to the next one. Price versus value, Tom. I wonder if you think this way. We've been talking about sort of like the energy complex, so energy stocks as well as nuclear stocks, which are going sort of parabolic to the upside as well. CCJ is one of the read-throughs in this underlying. There was another case here today that Google's looking to do something in nuclear. So you've seen Microsoft buy utility companies, 3 Mile Island reopen. There's this continual drumbeat around nuclear energy, or just energy in general, and the need to fuel this AI turn. My question to you is, Tom, when I look at the S&P 500, everybody knows that tech makes up 30% of the S&P, but energy has gone from like 5% a few years ago, which I thought was low, down to 3.5% of total exposure in the S&P 500. So if I move away from price and I'm just looking at value, and I say that it seems like we've over allocated capital towards tech and we've under allocated towards things like utilities and energy, which would be needed if those technology valuations are in fact real. Do you see the market through those types of lenses, that there's potentially under invested areas in the marketplace, and then invest or trade based on those types of themes? Or no?
I think the answer is sure. What would make you think that I don't think that?
It was an honest question. You always think I have a motive with this. It's just an open-ended question, man. Do you see the world through that lens?
I
there's
do.
Only 3.5% of the S&P is allocated towards energy stocks in a world where we need energy to power this whole revolution that everybody's hyped up to begin with. To me, that seems like it doesn't make sense, and it seems like it would need to normalize. And the fact that the market is almost saying, if you don't buy these companies, then Microsoft's going to buy it. They bought CEG. If you don't buy these companies, then Google's going to go buy it, because the valuations are cheap enough for them to just internalize or vertically integrate these companies and bring in energy. And if investors don't buy them up, then they're left with cheap valuations for these tech companies to buy up. And that sort of seems like the world that we're in right now.
I hate to put a box around energy because I think it's such a difficult place to trade, but it's the challenge with energy is that it's so uninteresting from an investor standpoint that you're never going to get any kind of a premium in energy, and you're never going to be able to build an index that people want to trade. Remember how indexes make money because people, pay fees to use their benchmark and their name and everything else. If you build any kind of an energy index, it's basically a dead money product that has no value. So the reason that energy is so low, and the reason that most indexes that used to, be heavily weighted towards energy are no longer in play, is because there's no sex appeal to energy. It's one of the few areas left that's considered to be manipulated. It's highly regulated, and it has basically no asymmetric upside because it's a cyclical marketplace. So the reason that energy trades in that minuscule amount of percentage, that minuscule percentage of total assets, is because it has no real value. So I'm just saying that your argument, although it's interesting, it's easily justifiable. If I was building an index tomorrow, energy would be virtually zero.
Wouldn't that be based on yesterday's economy, though? And aren't we moving to an adjusted economy where energy becomes a much more necessary part? And it's possible we just haven't allocated capital towards that direction yet. We're first level thinking around AI and data centers and those types of needs.
It hasn't been proven yet that, how they used to say the same thing about digital assets. Okay. Mm-hmm. The same exact argument that they're making now for AI, they were making about digital assets. And it didn't prove to be the disaster or the problem that it was. I just feel like you got to be careful when you go down the energy rabbit hole. It's not, that demand's not proven yet.
Come up with a new formula. So I gave you 2 market-related topics, and then I give you 1 political-related topic, just to get you to wake you back up. So the political-related topic was last Wednesday. John Kerry gave a speech he participated in a panel at the World Economic Forum. And one of the things that he said was he was talking about social media. He was talking about disinformation and misinformation on social media. And he said that the First Amendment is a major block towards hammering out those points of views and being able to get people towards, some sort of centralized or trusted distribution centers or trusted information sources. And one of the conversations you and I have had is I've talked about this sort of growing drumbeat. Obama said something about the First Amendment. Hillary Clinton said something about the First Amendment. Now John Kerry at the World Economic Forum said something about the First Amendment. And by the way, John Kerry, let's not forget, he served in Vietnam. He came back. His rise to political prominence came from speaking out, becoming a critic of the Vietnam War. Not only did he testify in front of Congress, he participated in anti-war rallies, so on and so forth. So he himself has utilized and exercised his First Amendment rights, and now it seems like he's seeking to move the Overton window on First Amendment. So, Tom, we've sort of had this conversation before, and I'm guessing you got a bunch of feedback on your point of view, and I wonder, have you changed or shifted your position in any way? Do you believe that the First Amendment needs to be modified in some way for a digital future, or do we instead need to figure out how to extend our current freedoms, our current rights, and our current values into the digital future?
It would be ridiculous for me to say that everything doesn't. Markets move. I mean, one thing we've learned, Victor, is that markets move. And as markets move, sometimes you have to move the fences a little bit. I'll give you a golf analogy. All right, because I know how much you love golf. When the first golf courses were built, because of the equipment that players had, the holes, even though the golf courses like, old, beautiful golf courses like St. Andrews and Troon and all those places, first golf courses ever built, a long par 5 might have been 500 yards because of the type of balls they had, the equipment, everything else. And these are for pros. Today, because they have better equipment, better technology and everything else, that same hole is going to be 660 yards long. Did they change the game of golf? It's still a par 5, okay? It's still played the same way, essentially. But the equipment's better, so they made the hole longer. They modified the hole to take into account the changes in technology and things like that. I think what John Kerry, Obama, Clinton, and everybody else is talking about is not changing the game at all, but modifying the fences and modifying the circumstances. Misinformation is something that was fairly removed from in past, okay? If you provided misinformation, you essentially, you got shut down. You lost all credibility. In the current year we're in, misinformation can be completely anonymous. Misinformation can be from somebody running for president that can't tell the truth. I mean, you can have misinformation now. It's very different than it ever was before. So should you move the fences? Of course. I mean, you modify it. You're not taking away anybody's First Amendment rights. You're just modifying it.
So I think what you're saying, I mostly agree with, which is you shouldn't take people's First Amendment rights. What I do think is very interesting about the time that we're in is it does seem like there's a resurgence of people thinking deeply about the value of our democracy and the value of our Constitution, the value of the Bill of Rights, and the value and the structure of our system. And I think, if anything, I know we don't necessarily agree on many different things, but for the first time in a long time, it feels like there's sort of this political consciousness. Maybe this is just me personally, but it does feel like it's a bit broad. Maybe it's because it's an election year. For all the young people out there, I would encourage all of you not to take these things for granted, no matter what side of the aisle you're on. I feel like I waited too long to become more involved in political consciousness. So I would just invite all the young people to understand the values that you have as an American. With that, gentlemen, I will peace out.